Beijing and the fight there against COVID?
Yeah, it is textbook risk aversion, and the reason it's important to emphasize that is because most of this year we have not seen textbook risk aversion. Generally this year, risk aversion has been around inflation, around higher yields, which means we've seen bonds sell off in line with equities, and that has messed up some of the haven trades. Obviously, it's messed up treasuries directly, but it's also meant that yen has not worked as a haven trade. So it's been a very, very strange year. We've had risk aversion. But today, this is just concern about what China is doing on COVID, lockdowns possibly moving from Shanghai, and as aggressive lockdowns perhaps moving to Beijing in the coming days. But we do know just generally, whether they lock down Beijing as aggressively or not, we know that lockdowns are spreading in China. So there's a massive hit to the commodities complex, which has been one of the big trades the last couple of years. A worry about what this means for growth, for supply chains. It's weighing on stocks, it's weighing on currencies, it's weighing on every risk assets, whether it's crypto, it's whatever you want. This is a bad day out there.
Yeah, but it is a very different day, as you pointed out. So it is different in terms of that classic risk aversion trade. The sovereign bonds column on the GMM looks very different to the one we've become used to. And the commodities space really seeing this sell-off. And just to underline what you've just been saying there, iron ore down by 7% or so, aluminium weaker, steel weaker, oil prices considerably weaker then, Mark, down by more than 3% on Brent, 103 now the handle. How much of a real pivot are we seeing here in commodities, or will we be back to driving higher commodity prices, concern around supply, and then concern around inflation in the weeks ahead?
I think that this kind of hit to commodities, to at least to energy prices and to metals, might last for a few weeks. Food prices are a different story out there, but I think that, you know, that the fact that we're seeing China demand for oil collapse as the greatest extent since the start of the pandemic, and potentially looks like to get worse, I think this is a real change in sentiment around commodities. I don't know whether yields really can fall too far despite that until the Fed next week. We do have the Fed coming up, but I guess one of the reasons the markets were so vulnerable today to this China news is they got hit really badly on Friday on a completely different type of risk aversion. That was about the idea of higher yields, so they were vulnerable today, and suddenly they've been told they've got something else that's much bigger to worry about.
Okay, something else to worry about. And you mentioned food, and on that front we have something else to worry about as well. We've seen various parts of the world taking action to stop exports of foodstuffs as a result of the conflict and the impact that's having on food prices. Today it's the turn of palm oil.
Yes, look, as you say, there's a reoccurring theme about kind of food protectionism, but Indonesia is the Saudi Arabia of the food oil market. This blocking of exports in palm oil will have major consequences last, particularly on Asia CPI baskets where food is a bigger component.
Absolutely. Okay, thanks to Mark for spending, for being with us this hour and for those initial thoughts around the markets. Remember, you can get further analysis and insight from the Markets Live team. MLIV Go, that is the function to use on the terminal. Coming up, we'll pick out